is not looking good, unfortunately. And the global voices, which matter, are actually talking of fairly serious downsides still left on the markets, and it's showing in the way it is behaving. Yes, the futures may be doing okay, but for now, the cues aren't the most positive. So let me start with a quote from Chris Wood. He came out with this greed and fear note yesterday. He says that the base case remains an absolute minimum 30% decline in the S&P 500 from the top. That is, as last Friday's CPI data has reminded investors of how hopelessly behind the curve the Federal Reserve is. Now, viewers, keep in mind, I mean, when we're talking about the bear market territory, that's 20%. So whatever levels you're looking at from, there's still about a 10, 12, 15%, 10 to 12% downside, you could argue, or maybe 8% downside, between 8 to 12, whatever levels you can look at from your perspective is where at least Chris Wood believes it could go to. Yesterday, I think I was, there's Rupal Bansali on one of the media houses, wherein I think her estimates are that the targets could be way lower than the 3,000 as well for the S&P 500. So over a period of time, that is. So who's to say? But for now, most people are betting on some downsides, and maybe rightly so. So here's the global updates, right? The S&P 500 is poised for the worst week since March 2020. That tells you a story or two about how badly this week seems to have been impacted. Oil is rebounded as the new Iran sanctions fuel more supply concerns. Bitcoin has dropped sub 21,000 levels, which is at levels not seen since 2020. And the US dollar has posted the biggest two-day drop since March 2020 as the European central banks have stepped up the monetary tightening. Yeah, so these are global updates. And as you can see, everything else is low. The one which should ideally go low for inflation to ebb a little bit is oil, which is actually rebounded as the new Iran sanctions are fueling more supply concerns. You know what? I'm not even giving you all the bad news, right? So aside of these, I mean, if we just look at European gas, it surged about 24% as the Russia crisis has escalated the energy crisis. The Bank of England is hinting at even bigger future rate hikes. The Europe's top sugar producer is saying that you have to brace for even higher sugar prices, which would mean that it will fuel inflation as well. And no, we're done with this plate. And China's number two retailer is saying that shoppers are reluctant to reopen their wallets, even as major cities have come out of the lockdowns. Now, the world economy needed China to spend and be even more stronger. Even that is not seemingly happening. So it's not looking a very pretty picture. That's the limited point I'm trying to make, though you don't need me to tell you that. US markets tell you that story. They were down and out in trade yesterday. Let's see if today's an encore. So then one day uptick was very, very short lived. Everything else, I would love to see what the dollar index, for example, 103, hardly any move there. But CBOE VIX up around 11%. 10-year yield still hovering at about 3.26 levels. So down a little bit, which is actually a good sign, but nothing to really uh, write home about. And I'll be really surprised if any of the Asian, I mean, most of the Asian bourses, including Australia and any of the others, Nikkei, for example, on the BOJ decision day, are down. And the SGX Nifty, I reckon, would not be trading materially different than, I mean, we had a bit of a fall in trade yesterday, but well, it's flattish for now. Let's see if we hold on to this or not. Because remember, yesterday too, we actually started off much better, but then really, really came off in trade. So I would suspect that, and by the way, just a brief about yesterday's trade before we move on to the trade setup. Um, the market breadth was abysmal as this uh, depiction shows you. Now, stocks are set to extend the tumble on a very gloomy Friday. The breakdown of March lows of 15,650 yesterday now brings 15,000 as the new support. For a lot of people, there's a large gap. There could be small, immediate, intermediate supports, but 15,000 is now the next big support. So another 300 points kind of go away without the Nifty finding any material buying interest from a technical parlance. I mean, there's no new advice that anybody can give you. I think staying light on any leverage trades, upside or downside, is probably the best idea. Now, viewers, in there could be a scenario or two, right, wherein there will be some stocks which could do well. mean, some FMCG names. There's an ITC which was relatively holding out yesterday. You will have these idiosyncratic moves into specific stocks because of individual triggers, lower liquidity, defensive nature, maybe fairly strong earnings as well as oil upstream companies would have you, right? So all of those might do well idiosyncratically, but you don't quite have a handle on whether individual stocks can outperform really well. And that's the point. I mean, that a tide which is going down would largely take all boats along with it. There could be a very few which could outperform, but very difficult to say. And again, I'm not the one to predict that the Nifty will go to 15,000 or 14,500 or thereabouts. It may well do if the global markets continue. And like I said, they are defying all the quant indicators of the recent times, which are all screaming a buy from a tactical perspective as well. But the markets are not giving anybody a chance to do that or make money on that trade at least. So if the indices were to continue to remain lower and get bogged down by what's happening around the world, and it's not a very pretty picture out there, by the way, then you know, I mean, these one-off trades may or may not last really. To add to the woes, by the way, just sorry, I'm not sound very, very dark and gloomy, but the picture is at least the news flow is that way, and I'd like to say it as it is. A monsoon update isn't the strongest either. The slow monsoon progress in June, which may delay sowing of crops in India, according to IMD, is saying that the monsoon rains are 32% below normal thus far. So that's the long and short of how it's happening. Now, specific stocks, I mean, Vakrangi, of course, went up 9% yesterday. It entered into a seller agreement with Decathlon, which is actually a good news for Vakrangi. But, such a difficult stock to monitor or map earnings with. Please be careful if you want to buy into some of these names on the back of this. Now, here, look at this, viewers. I mean, some of these companies have done bad thus far, and there are sell calls coming even now. So Credit Suisse and Jubilant on Gujarat Gas, excuse me, underperform rating with a target price of 380. They say margin expectations, according to them, are still high and more downside is likely. The stock has corrected 17% here thus far, but is still pricing in 10% volume CAGR for 10 years and margin expansion. Can you believe? What were people thinking when they were holding the stock at those levels above 17% as well? So that's a story or two, right? They are very cautious, having downgraded the stock as the industrial segment bargaining power is reducing with customers, increasing propane capacity. CNG margins would probably moderate with increasing blending, and there's a sharp rise in spot gas prices. Margins should moderate according to them in the second half as more volumes return, um, and CNG input cost increases. So they are not too bullish on Gujarat Gas. UBS is not too bullish on Jubilant Foodworks. They are neutral. They say that the stock could continue to remain under pressure given the change in management, high inflation in key raw materials, including wheat, dairy, and chicken prices, increasing concerns of a slowdown in discretionary consumption as central banks raise rates to control inflation. They've cut estimates by 10% to 9% for FY 23-24. They've now priced in a 70 basis points YOY decline in EBITDA margins as well. Viewers, I don't, like I said, there are not too many stocks, but if everybody's wondering if discretionary consumption and eatables would be the last man standing any which ways, well, I think it depends, right? The China's experience shows that at times even discretionary consumption is being combated with. So we thankfully not in a scenario like Pakistan, wherein the ministers have had to ask people to cut down tea consumption to 2 cups of tea a day because they import all tea and their forex reserves are depleting. So touch wood. I mean, I don't even want to compare us to that, but I mean, India to compare to that, they're very different economies per se. And one hopes that the residents of that country come out of the quagmire, or Sri Lanka come out of the quagmire that they are in. But the larger point is that there are some headwinds on the horizon, and therefore discretionary stocks like Jubilant Foodworks or some of the others, if they are trading at higher valuations, could also come under pressure. Who knows? Lastly, can the stocks bounce back anytime? Yes, they could. So hear me or anybody else with buckets of salt, because I think these times are slightly unprecedented. Not too many people would have seen through these or understand this very well. So believe every Twitter follower or a Twitter influencer that you follow as well, with a pinch of salt. Read as much as you can of various people and try and understand from people who've seen multiple such cycles to assess how to go about such cycles. These are slightly unprecedented times, viewers. Thanks so much for tuning in. please stay safe. Cases in India are rising as well. So please stay safe on that front too, and try and have a good Friday.